I'm Owen Bigland. This is the Inside Edge video blog. Okay, let's kick it off with, haven't done this for a while. Let me plug my book here, Along for the Ride. Hey, my wife's birthday's coming. I gotta get some revenue here. Listen, I didn't write this book to make money, as you guys know. It's a pay it forward thing for me, a business card, a door opener. But I tweeted the other day on my Twitter feed, Along for the Ride on Amazon. I'm still in the top 100 business books. I think right now I'm at like 72 in the top 100 after 3.5 years on Amazon. I don't know how many thousands of copies I've sold, but it's way beyond what I ever imagined when I wrote that book. That was a labor of love for me, as I've talked about before. It took me about 18 months to write it with a financial writer in New York. There was some times there writing that book that I thought, what am I getting into here? This is taking a lot longer than I thought. Is it all going to be worth it? And it has. It's really has blown away my expectations. Thank you to everyone who has bought my book and given me a nice review on Amazon. It's $9. I think you can get it on Kindle for $5. It's a really good door opener, a first step for people to learn about the magic of buying your principal residence, maybe buying an investment property, and then saving for retirement through just low-cost ETFs and good dividend-paying stocks. So thank you for everyone who's bought my book, and let's try and keep it in the top 100 here for a couple more years to come if we can. So on this one, I'm going to talk about a bunch of things here. I'm going to talk a little bit about the whack-a-mole that I always have to play with the media. I know I harp on this a lot, but it's what I've said for many years now. The bar is set low here. For you younger people, or even any age, middle-aged people that are saving for retirement, trying to save to buy your first home, or if you're already in your principal residence, just the positive affirmation to stay the course, enjoy your home. Or if you're in the process of saving and you're currently renting, stay the course. Do whatever you can to get that 20% down payment and get into your first place, because you've crossed a huge hurdle in life. Trust me on this, because I've lived through this and I've represented hundreds of clients over the years. You will never regret it. I saw a poll recently that I posted to my Twitter feed. If you're not following me on Twitter, I'm not all that active on Twitter. As you guys know, I don't correspond or go back and forth, but I do tweet once or twice a day some good articles from the Wall Street Journal or wherever, from some of my hedge fund guys, some good money making ideas, investing ideas, real estate, what's in the news in Vancouver. But I posted a tweet a couple days ago on a poll taken asking Canadians who own their own home if they had any regrets. And 88% of Canadians said they had absolutely no regrets of ever buying their principal residence. And I would go one step further. If you ask these people, the 12% probably sold way too soon. They bought, overpaid, and then for whatever reason had to sell, and maybe lost a little money in the first 2 years, which is very common. I would go one step further. I know my own personal poll from my hundreds of clients I've represented, and my family and friends and everybody else. If you were to ask someone, if you bought a home and kept it for 20 years and then polled them, do you have any regrets of buying that property? I can tell you that it would be 100% have no regrets. Best decision they ever made. So remember that. As I've said many times before, I've never met anyone in my 33 years in real estate that ever had any regrets about buying their principal residence and keeping it for 20 or 30 years. But I've met hundreds of people, hundreds over the years, that have sold too soon and had a ton of regrets. Again, my golden holding period, I've always stressed here with people, 8 to 10 years. If you can't hold the property, whether that's an investment unit or a principal residence, for at least 8 to 10 years, or have a strong backup plan where you could move and rent the property and keep it, hold it, then you have no business buying real estate. Just like I would say you have no business investing for your retirement if you can't buy and hold a good S&P 500 ETF or a Dow index ETF or Apple or Johnson & Johnson and keep it for 8, 10, 15, 20 years. You should not be trading. Trading real estate makes 0 sense. It's ridiculous. It's incredibly expensive. And it makes 0 sense as an investor either, trading in and out of stocks or ETFs. Just buy it and hold it. It's the only advantage you get. A couple of fake stats though here. I always got to play the whack-a-mole thing. It's the usual cadre of these unpaid media liaisons. They love these negative guys. It's the same guys. We all know who we're talking about here. I'm not going to name names, and there's a couple of them. There's about 4 of them now, but I don't even want to mention them because I don't want to get into any type of skirmish with any of these people. I don't have the time. They're not worth my time. These people have all the time in the world. They're at a drop of a hat. The media can call them and they'll pick up the phone or go down to the station. Because the narrative is it's always negative. Give us your opinion on, is the market going down? Give us your opinion on what Mr. Siddell is predicting. They always back it up. A couple of stats here that I saw just thrown out recently on CKNW. This guy was claiming that downtown Vancouver condos are in a tough go right now, which is completely contrary to what the real estate board is saying. Our July stats came out and they were off the chain. Sales are way up, inventory is down, prices are up. He came up with some stat that says that condos are down 18% sales volume. Now, I don't think that's a legit stat, first off, but here's the thing, and I've been pounding home to people. Sales statistics, sales numbers don't mean anything. They don't. It's prices that people are interested in. So when you look at a sales number and sales have dropped 18%, it's a useless stat unless you take it in conjunction to what the inventory is. Listings are way down post-COVID. They're still way below our 10-year average. So we have nothing to sell. And that's why I've been pounding home to people. I don't rely a whole lot on stats, and 99% of you guys watching this blog should pay very little attention to stats because they don't mean anything. They don't even mean much to me as a realtor. The best stat to use that gives you a quick synopsis of what the market is doing is the sales to listings ratio. But you notice how you never hear these guys talk about the sales to listings ratio. The reason they don't is because it's too good of a stat. You can't take sales numbers unless you take them in conjunction to what is for sale. The active sales to listings ratio, and that comes out from the Greater Vancouver Real Estate Board, and again, that is the only stats package you want to look at. Everything else, I can tell you from some of these guys, is cherry-picked, it's massaged, it doesn't mean anything. Active sales to listings ratio across the board is around 25-26. That's for everything, condo, townhomes, and detached homes for the Greater Vancouver Real Estate Board, which includes Vancouver, Richmond, Burnaby, New Westminster, Surrey, etc. If you broke that down for 1-bedrooms downtown, good quality 1-bedrooms, it's probably over 30 or 35. I can tell you if it's for the good stuff I like to go after, the active sales to listings ratio is probably over 40. There's nothing for sale. It's a waiting game on the good stuff. Anything over 20 is considered a seller's market. So remember that. These guys, they love to cherry pick some stat that the market's going down. Listen, I could sell, and I'm not telling you guys this to brag. I move a lot of product. I'm a listing realtor, but I also work with a lot of buyers too. Top 1% President's Club right now. I could sell, if I had inventory to sell on good quality 1-bedroom condos in the downtown core, I could probably sell 5 or 6 of those every month indefinitely. That's the demand I have for my buying clients. I've got investor clients that I've got pretty much carte blanche on. They buy continuously from me every year or two. They give me the green light, and if something good comes up, Owen, then pounce on it, write an offer for me. So that's the issue here. It's supply. Don't look at sales statistics if they tell you it's gone down. You look at that. You have to look at that and what it is in conjunction to listings. And listings are low, and the good quality stuff is ultra low, like it always is in Vancouver. The market right now, and I don't know where this is going to go, nor do I tell people who cares. Buy your principal residence, enjoy it for 30 years. Then look at it. But for right now, the market for condos in Vancouver, detached, is very hot in Vancouver East Side. Richmond, the market is trending up right now. Prices are going up, inventory is low, and sales for July were one of the best we've had for a July in a long time. And I think August numbers will probably be better than average for August as well. Where it'll go in the future, down the road, who knows? We're probably headed into a recession. Expect corrections, 5, 10, 15%. They're run of the mill. They should be expected they should be expected every 3 years. It's par for the course, but you're not buying and selling a house in 2 years. You've got a 20, 30, 40 year need. The other stat that I really had to get a good laugh at that I saw on Twitter, some guy out in Toronto, and it was picked up by some of the media here. They love this thing. This one is hilarious. This was some Canada-wide stat. Since 2005, Canadian real estate has gone up 88% since 2005 here. So we're talking here 16 years. And that was the highest, the most appreciation by any G8 nation, which I guess is the United States, Great Britain, I don't know, France, Spain. Now, what this stat means, and then there was all this outrage about it. 88%, the highest of any other nation. Listen, my first question, I've done blogs on this before. What did you expect the price of real estate to do over the last 16 or 17 years? Tread water? I mean, real estate will always go up to inflation, not in lockstep. But over time, everything goes up. You know, the cost to build those condos, the concrete, the rebar, the glass, the insurance, the labor, everything goes up due to inflation. I've always tell people that if you buy a condo or buy a detached house, you can expect it to double about every 18 years in Vancouver, in the Lower Mainland. And I'm using conservative numbers there. Maybe someone can run the numbers. I'm too lazy to do it. It's probably a 3.5% annualized rate of return. So not much more than inflation. Now, if you bought a house, I can tell you on this stat, this is Canada-wide. So PEI and New Brunswick and Edmonton and Saskatoon are bringing these numbers down. Now, how do I know? Well, I took a little look in my file cabinet here, and I bought a detached house in 2004, a year prior to this, and I can tell you it's up probably over 200%. I also bought a condo in downtown Vancouver in 2007, and it's up probably 125 to 145%, so way above this 88%. So in Vancouver, it's done. These numbers are being skewed down by the rest of Canada. Toronto and Vancouver would be way above this. But the question is, what did you expect it to do? 88% is modest returns over 16 years. I mean, the people that put this stuff out, I don't think really have done the math on what that is as far as an annualized rate of return. It's quite modest. I mean, I can't imagine what these people would think. I've longed about some of the stocks I've held over the years. I mean, look at Apple right now. I mean, my Apple shares are up 300% just in the last 5 years. Over 300%. I've got stocks that I've held for 20, 30 years that are up, I don't know, 1,500% on. Where's the outrage with that? I mean, look at Apple, Tesla, Netflix, Amazon. These make Vancouver real estate pale in comparison. But this is what real estate does. If you buy a home in 2005 and hold it for 15, 20, 30 years, you're going to make boatloads of money on that capital gain that's going to go to you tax-free. But it never ceases to amaze me, these amateur financial writers. This was done by some site in Toronto that it's done by these guys that get paid $50 an article. They're right out of community college. They have no financial background. And the big thing is you see, they don't have any financial success themselves. Yet they're writing for these financial and real estate newspapers, which just amazes me. They have no practical experience in this about buying a house, holding it for 15 or 20 years. Like I said, I don't even need to look at the stats here. I can just go into my filing cabinet and look what I bought around 2005. Again, I bought in early 2004, detached house, up 300%. Now listen, that is an anomaly because in 2014, late 2014, 15, and 16, we had a massive surge, especially in detached homes. But I tell people, if you buy a condo in the West End today for $650K, hold it for 18 to 20 years, conservatively, that condo will be worth double. And it could double a lot sooner than that. It could double in 10 years for all we know. So these stats are continuously out there. And I want people to avoid them. It's why I've often said the bar is set low here. They don't give you the real story here. And being outraged at an 88% return, and that's the highest of the G7 nations, 16-year and 88% return is not anything to write home about. It's okay. What did you expect it to do? I saw a really good quote I'll leave you guys with from Barry Diller, the media, billionaire media empire mogul in New York. He was talking about Apple stock, which he owns a lot of. And, Apple stock here, if you've owned it, again, as you guys know, I've been blogging about Apple in my YouTube channel here since 2012, 2013. I was buying Apple all along the way. Pre-split now, it's split 7-for-1 3 years ago. Now it's getting ready for a 4-to-1 split. When I first started blogging about Apple, you could have bought it pre-split that I was recommending it. I was recommending it at $400 a share. Then it split 7-for-1. So it was around $55 a share. I was telling people to buy Apple. It's now hovering at $500 a share. So you've got 1,000% return on Apple, so not bad. But all along the way, if you go into my YouTube channel there and look at when I was talking about Apple, all these doomsdayers come out criticizing me. You're crazy to be buying Apple, crazy to be buying it at 100, crazy to be buying it at 150, 250, 300, 400. This is what quality companies that make billions in profit do for you if you just buy and hold them. And there's been some incredible pullbacks on Apple. Look at what happened Christmas 2018. Remember, I did a blog there and I bought it just before Christmas at about $185 a share. It went down to about 140 and now it's, spiked back up. But you've got to get comfortable with that. Buying these good companies, even the good companies like Apple and Johnson & Johnson and Costco and Home Depot and McCormick, they have some rough patches where they're going to drop 10 or 15 or 20%, just like buying a good quality Vancouver home. It's not going to go up in a straight line. And these guys that write for these financial magazines and come on the radio, they don't have 2 dimes to rub together. They have no practical experience in this. So they can't, I don't know how they can give their opinion on this stuff about staying the course, because I've lived through it all and I'm doling out the advice that I learned from some of my mentors. The surefire way to do it. But Barry Diller was talking about Apple and he was talking about investing in general. All these bears that came out of the woodwork back in March and April. Sell all your stock. We're going into a depression. Get rid of your money. Go to cash. Barry Diller was buying, just like I was. If you go onto my Twitter feed, I laid it all out there for you guys. I've gotten some incredible, what looked like now in hindsight, absolute steals. I didn't think it was going to recover this fast, I'll admit to you. And I didn't think my stocks would be back way above 52-week highs. Most of my holdings are all-time record highs. If you told me that back in March, I would have said you're crazy. But Barry Diller, this is his saying for all these doom and gloomers, these negative people that are always complaining, always an excuse. Real estate's too expensive. Don't buy. Time the market. Sell. Get rid of all your stock. Go to cash. He says they're all like caddies on a golf course that they'll never play. And that is totally it. These guys you see on the CBC, CKNW, so-called experts in real estate, most of them, not all, but the negative ones that have been bearish for the last 6-7 years, totally wrong. They're all like caddies on a golf course. They're never going to play. They don't own any real estate. They don't have 2 dimes to rub together for retirement. And yet they're out there as so-called experts doling this stuff out. Ignore it, folks. Do it the basic way. Buy a book like mine on Amazon for $9. That'll be a perfect start for you on your road to success. I'm Owen Bigland. As always, thanks for watching. Thanks to all my new YouTube subscribers. I'll see you next week.